So we've gone from bull market to bear market to bull market in just over a month. What everybody wants to know is what happens next. All right, so where are we headed next? If anybody's being honest with you, they don't know. The point of these commentaries, as I've mentioned before, and we've been doing them for almost 5 years now, is to act as a bit of a counterbalance to sentiment, to keep people from making emotionally based decisions, whether those are bullish or bearish. It's also to help create an objective framework for you to understand what's going on. So let's start with this tug-of-war that's going on within the markets. On the one hand, you have epically bad economic data in a still shuttered economy. Jobless claims hit 6.6 million this week, putting unemployment at 17 million. Most people think we're on the downslope to 30, downslope in a bad way, in short order, particularly because if the economy doesn't reopen by the end of the month, which still looks doubtful, 25% of restaurants and bars are estimated to close permanently, which is a huge dent to our service-based economy. Other things happening, mortgage misses went up tenfold to 2.5% as of April 1. Things like treasuries and gold continue to signal risk off, even though equities are rallying. So that's, again, something that needs to be reconciled. And of course, as we're starting to mount, we're starting to see a lot of data around just the psychological impacts of the longer this shutdown goes, how quickly psychologically society can just go back to normal. And by most accounts, that's actually going to take a lot longer than maybe it was first projected. On the other hand, you have the Fed printing epic amounts of money. And lest that all strike you as too cynical, I think that's a pretty fair fight. I'm not sure it's a good one, but it's a fair fight for those people who are investors. For us, we have to go back to fundamental analysis. We have no insight on when governors are going to reopen economies or when the Fed might introduce yet another $2 trillion plus stimulus to the plan. So we have to go back and look at where we're at. Well, where we're at is we have $150 per share S&P earnings and dropping, even at 16 times earnings, which would be a slightly elevated number. That puts the S&P at 2,400, quite a bit below where we're currently at. Even if you think things could rebound to next year's levels, there's still a valuation of probably 2,500 to 2,600 for the S&P, outside again of that stimulus factor. More importantly to me, corporate buybacks are basically shuttered for 2020 with a 50 to 75% drop. The reason that's so significant, there's a great chart, is they've accounted for almost all the net purchases of stocks post-2008. Volatility, point number 2, remains exceptionally heightened. Volatility to the upside is a lot more fun, but volatility in general is usually would tell investors, if you go back to Depression era, other bear markets, it's not a great entry point for investors. And lastly, that consumer that we counted on and told you about was really the floor to counter the Uber bears that were out there for quite some time is gone, at least for the time being. So those personal balance sheets that looked okay and were actually at the best levels since the 70s are rendered moot when you have 30 million Americans thrown out of work. So what's the good news? Well, the good news is, and this is where I want to hopefully get you away from a trading mentality, which still permeates society into an investor mindset, is this is not a dilemma we need to trade today. It's not a dilemma that can be found out. What we've got to do is come back to process. And not enough people, even with the religion that hopefully we all got in the last 2 months about being prudent investors, have gotten this point yet. They still think they've figured out something that they haven't. They're still trying to trade where they think the market's going to head next. What you need to do is look at that process that you have to get you through times like that. For us, for our clients, 4 key stools to the stool of client confidence. Number 1 is that income stream. Whether you're taking it and thus not having to sell off shares at depressed prices, as so many people did, or you're getting to reinvest it, which so many dividends got paid again that 3rd and 4th week in March near the lows for the time being. It's an ability to push out that longevity, if not create, again, long-term wealth. Number 2 is diversification. All that boring stuff that we talked about that people didn't find sexy in 2019 is looking pretty good these days. You've got to have that for those emergency cash needs or to be able to buy down. If everything in your portfolio is down, you're just shuffling. You're not averaging down. And so we want to, again, be able to take advantage of these opportunities. Lastly is Look at our equity components, our risk asset components. Are there ways to reconstitute the composition of that into things that, again, will rebound more sharply than others? And the answer, of course, for us is there is. And lastly, the fourth leg of the stool is dividend growth. I know a lot of people worried about dividends. There'll certainly be some dividend cuts. The truth is the majority of bear markets since World War II have not seen a dividend cut, and those that have averaged around 5% and been backed even within 2 years, all of which is very survivable. Again, if you have those first three things in place or tools in your tool belt. So that's where we need you to place your confidence. With that, the good news around the coronavirus counts beginning to bend downward, all the government intervention, is if we can get the economy back here soon, a lot of the worst case scenarios are off the table. That being said, wouldn't be rushing in to buy markets at these levels because, again, there are a lot of unknowns coming down the pike, and from best we can project, some pretty bleak earnings that are going to happen, not just for the next quarter or two, but maybe even bleeding in to 2021. The best news of the week, the thing outside of Easter weekend itself to give you some good news for the week, is that Jake and Jamie welcomed Christian Jacob into the world this week at just over 8 pounds. Mom and baby are doing healthy, and we're so excited to have another baby in the 10 cat family. With that, enjoy your weekend, and we'll see you soon. What happens next? I have no idea. It's a note take.
I really want to put that in.